Hi, good afternoon, ladies and gentlemen, and welcome to Virtual Assets. How do we regulate an evolving, um, uh, uh, how do we regulate what constantly evolves? Excuse me. I am Renshi Olivier, and I would like to give a warm welcome to my distinguished panelists, Miriam, Rove, Xinglang, and Waylem. We are at an historical point in time. Virtual assets enables machines to add value, and we can impact the trajectory. What truly empowers growth? And one element would be confidence and addressing the lack thereof by putting regulation in place across geographies to create a sustainable marketplace. I would like to start off by asking Ralph why regulation matters to support virtual asset growth and create a thriving marketplace to protect consumers.
Awesome. Thanks for having me. It's an honor to be here. First of all, I want to thank everybody who put this event together. It's been an incredible week. I want to thank ADGM. I want to thank especially Mubadala, who's been extremely helpful and supportive of us at Andalusia Labs. And going back to your question, how regulation and why it's important to the growth of virtual assets. I mean, this question is basically why we built Andalusia Labs. A very quick story is, this is like a 2-3 hour story, but I'll compress this into 30 seconds. And basically what we've done, starting out as a child, got into programming at a very young age. We started building in crypto when I was in, middle school and high school, got into it when I was 14 years old. And, as I got into college, as crypto started to grow at a really rapid rate, there was this idea, this gray cloud hovering over the industry, being associated with risk, being associated with, illicit activity, being associated with massive fluctuations in asset prices. And basically what we wanted to do is we wanted to build this thing that solved the most important thing for people, which is consumer protection. And I think ultimately this is the most important thing that regulation can help enhance and empower. I will caveat this, however, it's not just regulation, it's the combination of regulation in addition with innovative technology that actually understands these risks at a very deep, abstract level, and more importantly, able to build a technology that's able to help protect these users against their risks. And ultimately, I think that's how we can help bring, digital assets to 1 billion users.
Miriam, what's your views?
I think regulation is critically important to the growth of the sector overall. For various reasons. The first one would be, obviously, like I mentioned, consumer protection, where regulation can protect consumers and investors when it comes to illicit activities, market manipulation, as well as sort of scams. What does that do also is onboard very important stakeholders that we need in this sector for us to grow further, and that's institutions as well as corporations. I think the second thing is also market integrity by having fair and transparent practices. It helps us create a good baseline when it comes to best practices that we can all sort of look to adopt. I would say risk management is another element. And most importantly, I think ultimately this helps create or enable collaboration between different jurisdictions where we can mitigate the risk against, I would say, what I would call regulatory arbitrage, where players can sort of look at jurisdictions that are easier to avoid accountability.
Xinglang, anything that you want to add from a regulatory perspective and how we can create that thriving marketplace?
Yeah, so my background is a researcher from National University of Singapore. I'm also a founder. So we face choices like I can use supercomputer to simulate and build a Ponzi model that in short term we can gain some money, but in long term it's not going to be sustainable and it's harmful for consumer. Well, another choice that we can face is that we can use the same computer, but we are going to train AI models or machine learning models to help detect Ponzi schemes. So this aligns with the way that we want to create secure and sustainable economics, especially with crypto growth. So we hope that the economic can grow, can work in a way that when we are contributing positively to the economic, to the ecosystem, we get rewarded. Right? And there should be some mechanism in place that discourage and penalize those harmful activities. Well, this comes with the regulations approach and other incentives. Well, we hope that we can also encourage young people to contribute positively to the economic growth, especially with all the DLTs and blockchains, all the new technologies. We hope that young people can be guided to be the right direction in this way.
Wei Lum, from a regulatory perspective, what can we expect in 2024, both globally as well as locally?
Wow, that's a tough one. I usually don't look at things by the year because you never know in this fast evolving space what you say today might just be irrelevant tomorrow. But I think from the developments in 2022 to today, certainly we can sense that there's a global regulatory tightening. And it's very clear for all to see. In the US, you have enforcement actions starting to take place. In UK, they have released discussion papers around introducing regulatory frameworks. In Singapore, you do have the tightening in terms of prohibition of marketing to retail investors in the crypto space, and the list goes on, right? So generally, I think regulatory tightening is happening, and it's bound to happen with any new asset class. The other trend I would say is there is an increasing regulatory convergence. I remember when we first started in 2018, we looked around the world. The focus back then was very much ML/FT risks. And there are some who just want to sort of watch and wait and see how it happens. So most of the people jump in to sort of regulate the ML's FT risks. We adopt an approach where we think that beyond that, we need to address a whole range of risk before players can really get into this space. And having spoken to the institutional players, certain things were clear, right? If coins continue to be hacked and stolen, it can't be mainstream. So we introduce safe custody rules. The market integrity has to be safeguarded before someone is confident that the market is not subject to abuses and so forth. So we introduce rules around market abuse. So I think you find that with 2022 happening, the regulators are starting to introduce rules and regulations around custody, safe protection of the client monies, technology governance, and so forth. So I think over time, there's a sort of a gradual regulatory convergence towards the traditional financial sector that we see in the security sector, in the banking sector. So I think those are the two broad trends. But in just looking 1 year ahead, I am particularly excited by what the real asset tokenization has got to offer. I'm particularly excited about such tokens in the private capital markets space, where they can introduce efficiency, accessibility, and transferability of value. Stable coins is another area that I'm really excited about because in every transaction, you need to have a transfer of monetary value. I would perhaps throw a bit of a dark horse into the conversation, and that is, with the increasing focus on ESG issues, you would actually see regulators starting to maybe introduce ESG disclosure requirements on the use of cryptocurrencies and the offer of cryptocurrencies. Yeah, that's my take.
Miriam, while most geographies, not all geographies are where the ADGM is, for example, in terms of regulation in virtual assets, what can a consumer do to protect themselves while the other the jurisdictions rather are playing catch up?
I think education is key. Consumers need to learn more about the space. It's building awareness and education, I think, is key to this. And Circle as the issuer of USDC, part of our business to do this, especially in emerging markets where we're seeing a huge need and big problems to solve. USDC has been sort of, I would say, a very important tool when it comes to contribution to financial inclusion. We're seeing real world use cases, especially in markets where there is hyperinflation, devaluation of currencies, and especially if you look at the large segment of unbanked or underbanked today in these markets, regulated stablecoins like USDC become very, very important. So as part of, I think, the role of USDC as well as, or Circle, as well as our key partners that help us grow in different markets, is to actually make sure that we educate these users. We do see, other tokens that are sort of, circulating in the ecosystem. They're not regulated. The users don't really understand them. They don't understand the difference between what's good, what's bad, and what's ugly. And I think it is our duty to make sure that the wider public understands that.
As you all know that have attended today, we've another hot topic is artificial intelligence, the new companion, so to speak, on the blog. Shengliang, how can AI play a role in combating virtual asset risks to ensure innovation is implemented responsibly?
Yeah, that's a good point. Everyone nowadays looking into how we combine AI and Web3 or cryptocurrency. So we are looking in the way that we can categorize AI into two broader categories. One is more narrow AI or specific AI. The other one is more general. We can think about narrow AI as a specialist in the room. They can be very efficient and very accurate in detecting certain types of tasks, for example, fraud detections, or your transaction analysis on blockchain by looking into mountains of data on blockchain, on social media, even profiling of the company. But they can be predictive so that we can take proactive actions before everything is too late. And it also can be very accurate so that we can take immediate response to mitigate the risk with confidence. Confidence is very important, as we can be sure that it's something we need to take actions. So the general AI, in another way, is more like ChatGPT, is more broader in capability and scope. We take broader AI in the way that it can be a co-pilot. Well, they assist analysts, detectives, police, and regulators in analyzing, in operating on different applications that has been powered by narrow AI. So narrow AI more specific, general AI in the way of leading multiple narrow AIs in doing the task. That is how we vision the architecture in AI is helping of risk management. So this general AI, they can start by understanding very complex queries, by preparing the inputs of narrow AI, and also understanding the outputs, getting insights. The more important part is that it can provide strategies as well as in helping with decision making. So that is in our company, when we build products, we hope that we can build in this model that combining of both narrow AI and general AI, it helps with both the risk analysis and on the other hand, it also protect innovations in this domain.
Miriam, what are some of the 2023 virtual asset industry trends that we've seen this year, and what can we expect in 2024?
We're continuing to see, I think 2023 has been great for stablecoins, especially for regulated stablecoins like USDC. We're continuing to see the growth of this space and real world cases, as I mentioned earlier. If we look at, given the fact that we're in a sort of a crypto winter until very recently, 40% of the crypto transactions were still in stablecoins. If we also look at some of the settlement numbers from last year alone, I think there were about $7 trillion settled in stablecoins. And this is starting to compete directly with the likes of Visa and MasterCards, right? For us, as Circle, I think with over $12.5 trillion in circulation, we're already seeing how USDC is empowering users to both be onboarded on the Web3 space, to contribute to this digital economy that's being built around us, but also to be able to send, receive, save, and secure their money. Again, specifically, if you look at the backdrop of the global macroeconomy that we're experiencing today, I think it's becoming vital for regulated stablecoins to play a very important role in this space. That's one. I would say regulation. I think Waylem covered this very, very well. I think we're likely to see more regulation come into place, specifically for stablecoins. We're already seeing this both in the US. There are current discussions about sort of stablecoin bill being passed hopefully very soon. The UAE is currently sort of looking to space with their market consultation, which we expect to probably see some decisions around early next year, which is great news. I think this is what we need, because this will help us really onboard a huge part of the ecosystem that's not yet, from the traditional financial space, that's not yet part of this. And I would say institutional and investors and corporations coming on board, really injecting capital into the space, but also building credibility even more to enable the digital asset to thrive and really sort of hopefully be embedded more into the traditional financial space.
To those who attended a session earlier today in the arena, a question was asked to the audience: Do we have confidence in the virtual asset marketplace as it is? And with that in mind, if you had the opportunity, and I'm going to ask this to all panelists, if you had the opportunity to come together as a panel to work on specific initiatives or projects, levering off each other's specialities within the virtual asset space, what would that be and what would that look like? Xinglang, let's start with you.
Sure. Yeah, we have all this type of different expertise in the room, and we hope that UAE, specifically ADGM, is so great environment in helping people to get together and build further together. We are so honored that have already been working with Violent's team, Violent himself and the team, for almost a year. So we are co-building the compliance assessment platform in reviewing digital asset service providers. But I hope that this model can also be working for other my fellow panelists, so we can help in reviewing service partners. But this is just a small pieces coming out from my mind. I hope I suppose this question is more about that we can build something big. This regulating and reducing the risk in crypto assets that requires multiple parties to join, no matter you are starting from the infrastructure like Rolf's building layer 2 with all the infrastructures ready, and all stable coins that is regulated. We hope that I'm not having a concrete idea, but definitely there's something we can join together. And instead is going to be the AI expertise in this room to help him review and mitigate the risk.
Thanks, Xinglang. Rolf?
Yeah, I mean, I think I would love to have their expertise on what we're building right now. I think at Andalusia Labs, our core flagship product is building the risk management infrastructure for all of digital assets. So we're already working with Wailon Kwok's team and at ADGM, working with Mubadala, but as well as, across our marketplace product, across our institutional security platform, where we do a lot of quantitative modeling, a lot of correlative risk across different sort of digital assets that just does not exist in the industry today. If you look at traditional credit markets and insurance industries, they have sort of centuries of underwriting frameworks, different types of correlative risk data. Whereas today in digital assets, we have no idea if a lending product on a certain chain goes up. We have no idea, like, what are the cascading liquidations look like? What are the different fluctuations in asset prices? What happens to stable coins, right? There have been some questions about that in the past. And I think this is a really, interesting opportunity. We would love to get the, expertise from Miriam, and, same thing with Xingling's expertise in AI. We're actually doing a lot of ML AI, sort of deep reinforcement learning, specifically around making risk management going from proactive instead of reactive. I think the industry over the past few years, looking at FTX in hindsight, people were like, oh, we should have, would have, could have done this. I think for us, we really want to build a technology to actually do that and prevent these things in the future, and really ultimately provide the infrastructure where, governments, financial institutions, developers, and ultimately consumers can all come together to build and benefit from the benefits that they can get from digital assets. So it would be great to work with all you guys on that.
Thanks, Rolf. Wailun, what would you want to tackle with this, all these expertise and subject matter expertise?
Sure. I think all of us have got a common interest here, and that is to enable mass adoption, right, of cryptos. And for us as a regulator, we're always in the business of risk management. So my wish list would be to be able to work with the two cutting edge risk technology solution providers here, to help me understand and monitor the risk that I see in the crypto space, or those that I don't see in the crypto space, and hopefully in that process to be able to evolve an appropriate regulatory framework to better regulate this space. A classic example that I'm looking ahead, at least for the next 6 months, DeFi, staking, right? So there are a lot of risks that I want to identify together with the experts here, right? Then I need an industry participant to test those, to give me the use cases, and that's where the stablecoin issuance circle and Miriam's team would be very useful, because only when we have the practical construct can we then apply our theoretical construct and all the supervisory tools that develop in concert with our risk experts here. So that would be my wish list.
Thanks, Walum. Our last question, Miriam, any advice for institutions that would like or are interested in setting up in this region, specifically in virtual asset space?
I'm going to be biased. I've been fortunate to work in this space and in this ecosystem, specifically within ADGM and Abu Dhabi for the last 6 years. And even before that in Dubai as well, I've seen the growth of the tech space initially before we moved into the digital asset space. There's a huge shift happening, especially when it comes to the regulatory landscape. If you look at other markets, which we consider sort of developed markets that are traditionally leading the regulatory frameworks, we've seen how the likes of ADGM have been leading the way in developing a very comprehensive digital asset framework back in 2018, allowing sort of institutional players to come in and sort of use the UAE and Abu Dhabi as a launchpad to the MEASA region. And I'm not just saying this as a PR, there is a huge momentum, and it has been going on for the last few years, but now we see the result. I think this event is probably a very good example. This started in 2017, probably as a simple fintech event with a few hundred people. I heard today that ADGM had 16,000 people registered. Mm-hmm. So that shows sort of all of this is probably a testament to all of the amazing work that has been put over the past years, and the momentum that's been pulled from different key stakeholders, whether that's policymakers, regulators, the investors, as well as the investment ecosystem and the startups themselves. So it's great to see that, and I would definitely advise these institutions to come in and speak to the regulators and really explore the ecosystem themselves, which I see happening already today.
Yeah. Unfortunately, we have run out of time. I would like to thank my distinguished panelists, and thanks everyone for listening.
Thank you.